All right, guys. Good morning. Happy Saturday. It is about 11 a.m. East Coast time. Veteran here, Independent Traders Guild, and we're going to do a series on all the PWG, ITG tools you guys have and how to use them. And the first one, and I'm going to build off of them. Some of them are more projecting a roadmap, macro level, bigger picture, swing trades for the week. Some are more intricate, down to the second, immediate arbitrage, and we're day trading off it and scalping off of them. The first one's going to be gravity points, and I've figured out a way to do replay in with jump share on. So I'm going to make this as fast as I can. You guys are going to need to go this. You need to understand that A gravity point is your quick one, B is your immediate, and C is your longer term. Okay. Also over here, you'll see that I've got the dotted line is your 21 EMA. We've got weekly supply, weekly demand. It's on every chart every week. It's the most important thing you guys have access to. And then we've got a 50-day simple, 100-day simple, 200-day simple, simple moving average. No exponential on the longer terms. I just use simple, 200 days, 1 day off, 199 stays on, 200 drops off, yada, yada. Okay, so that's all we got. I've rewound back to July highs, and you guys need to do this. I'm gonna fast forward it in increments of 3. Super excited I can do replay on video now. Figured this out, and so all we want to do is just play. We want to see where they are. If I go right here, we don't know if we're at a high or not. We know we've come off the March lows, which I called, by the way, on the 13th of March. So F the Furus, I'm the guru. But again, I got lucky. And if we're looking at it, we're looking at everything's positive. A and B are getting pretty well established above C. C is between the 50 and the 100-day moving average. Downside, I'd look for this to move, touch around here before the market moves higher. If you want to draw a quick fib, again, I don't know that that's necessarily the highs, but we got pretty much equal highs here. Made a higher high here. Here's the fib. A normal, healthy market is going to, at some point, retrace back to the 50%, 50 to the 618 before going higher. And that's what healthy markets do. It's not a sell-off. It's just a retracement. It allows the market to move, settle, and move again. So we'll see. But from right here, again, I would probably target 2 gravity points above the 21 EMA. Is usually a little bit inflated, so I'm not excited about going long. I might take some longs down here at 446, but SPY right now just hit a top of, I guess it closed at 455. So 455 down to 446, 9 points on SPY, 90 points on SPX. That's some decent savings. Let's just hit play and let's just watch it play out. You guys got to watch them move. You got to watch them move. There, got back down to the 21 EMA, but instead at 446, it was at 449. And then it failed that. And again, C and the 50-day, 100-day, 50-day moving average is pushing well above C. Again, I would look for this to be supportive. If we break this, again, so I'm looking at, hey, if we get below 443 here, I'd be playing long puts down to gravity point C, 436, down to the 100-day moving average, 426. Over the next 2 weeks, I wouldn't expect us to get down to this level so far, so fast. One thing I'll do is I'll throw on the purple lines. This is the PWG conservative low, PWG conservative high. Excuse me. Not much different than PVI, just to kind of give us an idea where we'd be selling PVI this week, below gravity point C, above the 100-day moving average. We'll see where it is this next week. Boom, we hit gravity point C. Like I was telling y'all, we get below the 50, this becomes a target. We get below that, this becomes a target, or our lows become the target. That might have been a clinched moment in time. And now we're in August highs. And And so now your fib, we got to go a little bit higher because the fib actually moved higher. And we put in a high on July 26, Wednesday, July 26. So if the market moves up, which I would expect it to do, I'd expect it to move to the 21, confluence between the 21 EMA and the 50-day simple, above gravity point C. A and B are still positive, right? So positive gravity points are going to want to pull the market higher. C is telling us the gravity point is in the price action is in a fair value historically. Okay, again, C is longer than A. A is kind of horny, quick twitch muscle fiber. There we push the 50, we drop back down, we hit weekly demand, and we lifted off of it. We got above weekly supply. We got above the 21 EMA. We got above the 50 EMA, or simple moving average. We got above gravity point C. Where's the target? PVI or gravity point A and B. I wouldn't want to sell big here because of these two. So what happens is when this happens, and I've got all three gravity points above price action, I'm a little more apt to sell bigger down here. And when Monday, when we cross up overnight, again, another video, my bad. We cross up overnight, Monday here, I got no problem selling here. I don't need to sell a ratio. Why? I got the 100-day moving average underneath, above me. I got the 21, I've got the 50, I got gravity point C. This is a lot of confluence in here. The market's in a balance right here at 444, and it just lifted. Let it play out. Now, here's one. As you see the gravity points start to get together, we usually have an inflection point in the market. So I'm going to go to one period. Again, this happens very slow, folks. Macro level. Boom. Now, when I see this is me, SPY, on a daily chart. When I see this right here, I can tell y'all right now, that move lower. And again, I don't care what stock we use. Y'all can pick a freaking Hindustan Airlines, for all I care. On another stock market, find one on Tokyo. The gravity points will tell us right now, when we find this, we find an inflection point. Well, where do you think mean reversion is going to be? From price, where is mean reversion going to take us to? The 100, the 21 EMA, last week's PVI, previous week's weekly supply, 50-day moving average, and all this. How much stuff do we got above us? I've got this week's supply, 1, 100, 2, 21 EMA, 3, this week's PVI, 4, last week's weekly demand, 5, 50 EMA, 50 SMA, 6, 7, 8, 9. I got 9 things above us. What do I got below us? The 50% retracement at 420 and the 200-day moving average at 418. So when I got 9 above me and I got 2 below me, and the market has made a low, a lower high, a higher low, a lower low, a lower high. As soon as we make a lower low right here, or a lower low than here, as soon as we make that lower low, 432, lower low, look out below. Lower low, look out below. Lower high, lower low, look out below. However, look out below, but guess where? Look out below right now, immediate, like this next week. But over the next 3 weeks, where am I looking? I'm looking for us to hit down here and move where? I'm looking for us to move back up into, I got my 50, 21, and gravity points. I'm looking for us to move back up in here. Now, this is cheating because this is SPY. What are we doing? We're in September. We know we make the lows in October. But watch these levels. Watch the 50. Watch the 21. Watch the 100. Watch the market. Down, bounce up here really, really quick. I don't want to sell calls in this zone because buy programs come in, we fill this gap at 38.5. We fill the gap at 38.5. We're running to 45. I don't want to be getting crazy selling a bunch of calls. Boom, right there. What do you got there? Not quite a hammer, but what do you got? Long bottom wicks. Who's pushing bottom wicks up? Buyers are lifting the market. What do? You guys are learning from me. And again, we're learning as we do this together. What do? Go right here. This is a Lowe's. I'm going to make it white. This is the candle body lows of this candle right here. We got an inverse candle right here. How many levels we got above us? 1, 2. Now, where's the immediate target? I mean, if you want to get in the money calls, 21 EMA, 100-day moving average, 100-day is still positive, 21, 100-day moving average, 437. Got to be kidding me. This from this move right here becomes like stealing. Why? We get above weekly demand, and we're going to go there, and we're going to target, and these are cheap options. Might not make it. Didn't make it. Glad it was a cheap option, right? Glad it was a cheap option. Does it change? Now look at my box. My box has moved lower now, right? My box has moved lower. So now what do we got in the box? I still got this demand. Still got this demand. I still got the 50. And now I got the A coming down. Is the A negative? It is negative, which means a push could go up here. We're not going up here. A is somewhat negative. So I'm going to sell calls up here. I don't care about selling calls up here. I'm not selling calls in here. And PVI is giving us this number. This is where folks get wrecked. Now, is this supportive? Well, if I was interested in buying here, and this was a reversal candle, and we spiked up 2 days to weekly supply, that was a win. That was a winning trade if you were long and had a debit spread at weekly supply. Now we're back down. Monday was in the middle. You know we're going to cross it. We crossed supply on Monday. We crossed demand on Monday. We never touched weekly supply this week. And now where are we coming down to? 200-day moving average. The half back from the March lows. And we just let it kind of play. And this is how you trade. Another doji, right? This is balance. Don't worry about all this garbage. That candle right there on the daily is balance. That candle right there means that flag in tug of war didn't move nowhere. That means that big ass Samoan that has been pulling the sell side, he's still in, but he's tired. And that means right there, all that bottom wick right there, that means the other side, the buyers, they just got a damn sumo wrestler. They got big sumbitch anchoring that tug of war. That's how you look at candles. Who's got the wicks? Do the wicks belong to the buyers or do the wicks belong to the sellers? Again, right here, wicks belong to the buyers, but we're still one time framing lower. Right here, wicks belong to the buyers, and we're higher than the previous candle. Probably going to continue. And we'll get into all this stuff, guys. This is going to be a series. I'm trying not to make these 45 minutes. Again, 200-day moving average, the half back from March lows, pretty supportive, right? I got targets above me. Now my box is getting longer. 21 EMA. 21 EMA. 100 EMA, still positive. 50 EMA. SMA, 50 SMA. Right at gravity point A. Guys, when they line up, that's a mark for you. Put it on the chart. 441. Why? We're probably going to be there in 2 to 3 weeks. And I want to help you guys do some of these option trades. And I'm going to do them with you. See if we get to the 100. Now what happened here? 100's crossing, 50's crossing down below the 100. That's a death cross. Where'd A go to? A dropped down. Did we make it up to that 41, 440? Nope. A came down. Are B and C still positive? Yes. B and C are still positive. Now the market's in a conundrum. right? Do I want to get here and these two and then press these two? Or do I want to come back down and test this candle low that we had that we broke? Once we broke it, this was our target. We didn't quite make it to our target. Well, crap. We didn't quite make it to our target. Did they leave the door open? In my opinion, 100%. They left the door open. Do we get there? I don't know. I don't remember. I don't think we, yeah, we do. There's October. We do get there. Boom, here comes. Now we're in the box. And now what? A is negative, super negative. We got the death cross on the 50 and the 100. And now the 21 EMA sloping downward. That means that run right there, we found balance. 1, 2, 3, 4, 5, 6 days of balance. Now, who's winning the candles? Well, there were no buyers on this day. Flat bottom red. That means we closed at the low of the day. You don't want to be a buyer there. Then we gap open the next day. We gap down the next day, and the next day was a green candle. Did we get back above the flat bottom red? Yes, we typically do. Did we get above it? No, we typically don't. Are we in the box? Yes, we are. We're in the box. Do we got some bottom candles here? Yes, we do. But we have more top candles. But the day turned green. So don't take a trade this day. Wait for the next day. Did we take out the green high? Yes, we did. Is it green? So what are we doing now? On the daily. One-time daily framing higher. Where are we this week? We are above weekly supply. Did we go below weekly demand? We did on Monday. Not on Tuesday. Where's the first target? Above weekly supply. Here. Your PVI is all the way up here. 21 EMA. A gravity point. You got a target here and a target here. Do you also have PWG levels? Absolutely. Do you also have MGI levels? Absolutely. I'm trying to give y'all the basis. So these three things aren't sitting on your chart and they're just mute. They're just sitting over there not saying a damn word. Look at C and B. Have they moved? No, they have not. So if we clear, to me, if we clear the 21 EMA, if we clear this zone, where are we going to go to first? 50, 100, B, C. How do you play that? Boom. To the long side. Oh, shit. We didn't clear it, did we? Now we got above weekly supply. And you guys know, and I hate to do this because we're way in. But, again, we got above weekly demand on Tuesday. We're closing above weekly demand or weekly supply on Tuesday. Do you still have, yeah, we started the week below demand. Do you always hold that put debit spread? I do, personally. I want a 10 wide for 250 and I want a 10 wide for 250. So I got $5 invested. If one of them finishes in the money, I make $5. I'm scratched. I don't lose any money. Right? 250, 250, $5 invested. Boom. We hit 10. If one of those finishes in the money, the debit spread finished in the money this week. I got paid out of 10 wide. Both sides cost me $250 each, $5 total. I doubled my money. I didn't lose any money that week. Another system, but it's part of gravity points to give us an idea. Now, here's another Fibonacci, right? March lows to summer highs, July 27th, half back to the 618. And how many times do I tell y'all? A bull market, the market's going to correct back to the half back, the 618 and go higher. Did we breach below the 618? Yes, we did. Is this a time where bulls are dead? Look at where we closed. This is how precise nature is. We closed damn near on the 618. From March to July, and then in October, we close. And this is where folks started buying. And you can see it. Look at what happened the next Monday. Did we get anywhere close to weekly demand? Nope. Did we push and open, gap open? We didn't gap open. Did we open above weekly supply? We did. Gone. Where's the next target? Look at how negative A is. Look at where B is, still positive. Look at where the 100 is, still flat. Look at where the 50 is, still negative. Look how fast we approach the 50. This is when PVI gets breached, right? Here's PVI, or right in here. Before we got breached by 38 points. Why? As soon as we came off this bottom, and this is what happens. Oh my gosh, we almost got there. Get long. Boom. We came back, and again, how many times did I say, let's get long? It didn't work out. It didn't work out. It didn't work out. We came back down here, and then we hit it. Oh man, we hit it now. As soon as we take off, this day right here, this week was a trap week, big time trap week. October 24th. Why? As soon as we hit it, man, we moved low to high. We came back, we hit the half back, and we took off, and everybody was long, and then, dude, they got the face ripped off. That's part of trading. I was wrong here, and because I was wrong here, I was very reluctant here. And this is where Perks called the lows. And then what do? We push the half back. Again, you're always trading this half back, this zone. Again, gravity point, super negative. The other two still positive. Pulling. The 100-day moving average, positive or flat, pulling. 50-day moving average, it's negative, but it's pulling. 21 EMA, that's your target. And look, we almost hit it on a Wednesday. So on Wednesday, we got the PVI high, we got the 200-day simple moving average, and almost to the 21 EMA. That's an alert. That's where calls are going to get in trouble. On Wednesday. And Thursday, we gapped open, no comeback. You gotta hedge, no comeback. No comeback there. And then we just play it forward. Back into the box. Got to B. Pushed all the way to C. Look at A climbing. And not a lot of look back. And then let's fast forward. And you guys can play this. You just need to see how they work. Now, what did I tell you all a little bit ago? I got to replay one. What did I tell you all a little bit ago about when all three of them get together? When they cross over. So what happened is in December, you guys remember I was talking about a window of weakness, and then we spiked down here. I was like, I don't know if that's it. And then we rallied, and then we spiked down in January, first week of January, and I'm like, that's more like that window of weakness we were looking for to get back to all-time highs. And then we pushed up till Friday, last Friday, and then we opened Monday or Tuesday because it was a short week. Martin Luther King, and then Wednesday, and what do we do? Okay, we push down. We got a daily chart. The open and the close above the 21 EMA and long bottom wicks, right? Buyers push bottom wicks. That's a buyer candle. Even though it's red, that's a buyer candle. We lift it. Not by much. This is a buyer's candle. We gap down. That was a trap, in my opinion. That's how I look at the charts. Is it a trap or not? So here we are. Now, what happens is A is lifted back up. Remember how negative A was? A's not coming back to B and C. But B and C might come up to A. And if B and C come back up to A and we get inflection point around this zone, around the 21, then this becomes the first target to the downside, 472. But then that 50-day moving average, 462. Again, red over white over blue, A over C over B. B and C are together. B is probably going to cross C. When it does, I would guess that when B crosses C, that's when we're going to put in our high. Is it on Monday? Is it on Tuesday? But I would venture to think that this next week, we're going to have 1 or 2, maybe 3 strong days. and then we're going to reverse back to the 21 EMA. So if the PVI is above the 21 EMA, I am not at all excited about selling puts at the 21 EMA because the market moves to the 21 EMA a lot. Okay, a long video, guys. The others are going to be about 7 minutes each. But I wanted to get the moving averages, PVI, gravity points kind of out of the way as a baseline. Next is going to be PWG Momo, how we use Momo. And now that you guys kind of better understanding of all this, you'll see how Momo kind of plays in to help us read the market and make smarter macro decisions and maybe be at a smaller exposure selling CCS than selling PCS. Or maybe being at a 1-to-1 ratio because the market's telling us we're probably going to stay in the middle. We're not going to breach either side. Or maybe be at a spot where we sell a lot more CCS than PCS because the chances we're going to come back down where PVI is, where that 21 EMA is, and where these 3 gravity points are. All that stuff matters when you're selling premium. All right, guys, 25 minutes, way too long, but I think it's educational. Have a great weekend.